Hello, folks. You're once again welcome back to my channel. I want to officially welcome you back to today's episode. So, on today's episode, I'm going to bring you live updates on some selected asset pairs, which includes step index, volatility 100, volatility 75, volatility 50, volatility 25, volatility 10, and then I will crown it with an update on Euro US dollar. Okay, so tonight's episode is going to be a bit compressed episode, and I believe that for those of you who have been on the channel, who have been with me all this while, you know how my updates are, and I believe by the time we'll finish tonight's today's episode, you'll be able to catch some trades or some pending trades, and I believe that it will be of good to you. If you are new to my channel, I want to officially welcome you to my channel. Here we learn how to engage the market using ICT strategy, the smart money concept, the market maker model. So if you are new here, I say you're welcome. Have a seat. Kindly subscribe to the channel so that when I post new videos, you are updated. All right. So let's quickly go into today's video, and we'll be snappy with it. I'll be very quick with it. So kindly take your time, watch, and see how I'm going to go about my analysis. All right. Okay. So first of all, let's start with step index. So with step index on the monthly time frame, what do we see on the monthly time frame? Currently, we have price taking liquidity from this low, resting below this low, price taking liquidity below this low. All right, and we could see price strikes surging up higher, and then it was rejected from this point and came down, and we could see this is December. The monthly candle has already started rising. All right, so on the monthly, what we could see is we're still, we're in a bearish trend. Okay, but then price has taken liquidity resting below this, and we saw the market reversing to seek for internal liquidities. All right, so now let's go down to our weekly time frame and see how the market is faring on the weekly time frame. So when liquidity was grabbed below this low, what was the next move? The market had the orders below this low, and then it rallied to take this high in here and closed in on this fair value gap resting in here. Okay, so as price closed in on the fair value gap resting inside this area, what we normally expected price to do was, after it has taken down this liquidity, or after price had taken down this high, taking down this high and traded into this fair value gap, we saw the reversal. Would necessarily expect price to seek for some external liquidity, but mind you, we have already taken an external liquidity on the monthly time frame resting in here. We have paired the orders inside this area. Okay, so the orders have been paired in here, and we are seeking for price to rally up higher. Okay, now obviously we saw this movement from this side all the way down this way. Now we can see that the structure has shifted in here. So beautifully, you can see that there has been a market structure shift on the weekly time frame. Okay, so on the weekly time frame, beautifully you can see the market structure shifting in here. All right, the market structure has shifted here on the weekly time frame, and we expected price to trade back into an OTE before we see the rally up. Okay, so when we have market forming something of this sort, breaking structure to the upside, now what do we necessarily expect? Where do we necessarily expect price to rally down and then reverse? Okay, now you pull your fib from this low to this high, and we frame our entries around the 50% level. So should price trade into the discount prices, that's where we seek for entry. So price traded into the 50% equilibrium level, and we could see price rallying back up. Well, we wouldn't say that price is going up and it wouldn't reverse. There could be a reversal because I see that there's a fair value gap resting in here. Okay, there's a fair value gap resting in here, which is an internal liquidity. All right, as beautiful as that. Why do I say price may come back to that level? Because you could clearly tell that price came up to take down this external liquidity resting above here. Okay, this is an old fair value gap which was already taken by this wick here. Okay, so now our concentration is on this high. Okay, so price, after it paired the orders here, traded up, closed above this high. Now we had a structure shift. Okay, then it means that an external liquidity has been taken. Okay, we've taken an external liquidity and we want price to reverse into an internal liquidity. So we're expecting price to close in on this tiny fair value gap resting in here, and then we would want to see price rally back up. Okay, so yes, this is a discount price that, I mean, should price trade back into this area, it will be a very solid area where price should, I mean, reverse on. Okay, so beautifully, that is what we are looking at. So fair value gap, price should trade back into this, which is even more deep discount prices. Okay, now let's look at it on the 1 hour time frame, on the daily time frame. Sorry. So on the daily time frame, we had this form of structure. If you can see on my screen well, we have this form of structure. Okay, so as price trades back all the way into this area on the daily, price is always printing the picture for us to see. Okay, on the daily, as price traded into this area on the daily, you could see that yes, there was a structure shift here. Okay, up this way, there was a structure shift back to the downside, which was a reversal. Okay, this shift happened for us to have this form of reversal. Price should trade back into this area and then sweep the liquidity, the discount prices, and then we'll rally price up. Okay, so as we had this shift, obviously what we're looking at was price should sweep this low. Okay, price should sweep this low. Price came down all the way to this point, and it seems, oh, price is not willing to come down to take this low. Okay, so this is a major swing. Okay, this is a major swing in the course of a reversal. Okay, let me explain something here. When we have a reversal, let me show you on the screen. Okay, so I'm trying to show you something in here. So assuming we have a reversal, okay, from this point, price moves this, and then we have price going all the way up into an area of interest, and then we want to have a reversal into this area. Okay, price doesn't just move straight down. Okay, so price can equally move in this manner. Price can equally move in this manner, an upward movement, a downward movement. So it is all a form of reversal. Okay, I mean, especially when it's on the higher time frame. So on the, for instance, if it's on the daily, on the 1 hour time frame, possibly the reversal will happen this way. Price will not trade straight away, coming directly into an area of interest or an OTE, an ultimate trade entry, or into 50% of the range. Okay, it may have something of the sort before it ultimately comes back into your area where your interest might be. Okay, so that is what happens when we have a form of retracement, okay, or reversal. Oh, sorry, when we have retracement, that's the word. Sorry for saying reversal as well. Reversal means that we will break the structure and continue. So that's when we have a form of retracement. Okay, so when we're having a form of retracement, that's what really happens. Okay, as easy as that. That's what I was trying to get your attention to understand. That's what I was trying to get your attention to understand, that irrespective of the fact that we have some form of retracement, when we're having a retracement, price doesn't move straight, it goes up, it does all that it has to do. Okay, because price is fractal. Whatever is happening on the bigger time frame, it also does happen on the smaller time frame. Okay, all right. So nicely, you could see it happening in here. Okay, you could see what I'm talking about happening in here. All right, so you could see that price is, it moved up all the way, and then it doing all that it has to do, move in a normal pattern that price has moved. And then, so now possibly all you could frame your attention on is that, okay, from this range to this range, okay, it's a normal range. All right, price can come 50% into the range and then continue with the retracement, okay, to sweep the low before ultimately expanding up to the buy side again. All right, so now obviously at this point I'm expecting that price should retrace 50% into premium prices, either close in on this fair value gap, okay, take some internal liquidity before we want to seek this external liquidity resting below here. This is not the target. Okay, this is not the target, because this is the swing that I just running away with. Okay, so this is the target. All right, so if we have price above this area, when we see price trades above the equilibrium price, takes down this internal liquidity resting in here, this fair value gap from this side all the way to this side. Should price take down this fair value gap, okay, and then we see a structure shift either on the 1 hour, on the 15 minutes time frame, we can engage the market and then ride to sweep this low. Okay, all right. So beautifully, that is the expectation on the step index. For those of you interested in trading the step index, this is just a brief analysis for you. Okay, now let's go to volatility 100. All right, so what is happening on volatility 100 currently? As I told you in my previous video, I'm expecting price to price has already taken down some external liquidities. Okay, let's look at it from the monthly time frame. So on the monthly, we could see that price traded below this low. Okay, so we're actually trading lower, and it traded below this low. It took down this external liquidity resting below this low. Okay, this is where you see that red line. So it paired the orders here, and then it rallied back up. So I'm seeing price rallying back up into this breaker. Okay, this particular candle, price traded fully into it. All right, and then you could see the next month's candle, which is the December candle, also trading into that. Okay, into that. Now, as price took down this external liquidity, you could see there was a fair value gap in here that price has taken already. So as price has taken external, it has taken internal liquidity as well. Okay, so obviously I'm expecting some form of this is some form of retracement. Okay, but I want to see the continuation back down, possibly. Okay, oh yeah, if it doesn't happen that way, we want to continue up and closing on this fair value gap. But then that's my wildest expectation. Okay, so now let's look at it on the weekly time frame. Should price close above this fair value gap and continue, it means that our target, we are looking at price trading back into this breaker, okay, and closing in on this fair value gap, right? But this is an old breaker that, I mean, price had traded below it and all that. So now let's look at it on the weekly time frame. Let's look at it on the weekly time frame to give some form of clear picture here. So you could see price trade back into this area, and it's closing in on this fair value gap. Okay, price has dipped already into this fair value gap with the wick here. Okay, and you see how price is also pressing on within this week as price is pressing on higher. Okay, I've seen that there's another fair value gap on the daily time frame. That price is still pressing on higher to reach out to this is another fair value gap resting in here, the main threshold of the fair value gap. I could see that price is trying to press on harder to reach the main threshold, and I don't have a clear setup here, in the sense that yes, this is a high, this is a low, this is a high, which the high is targeting this internal liquidity. Okay, price has dipped into the internal liquidity resting in here. So should I frame any trade? I'm looking for price to have some form of reversal happening on either the 1 hour time frame or the 4 hour time frame, happening around this area. Then I know that I have to engage the market, because I'm seeing this also as a breaker. Okay, all right, so now let's look at it on the 4 hour time frame and see if there's any form of setup. So price dipped into the fair value gap, internal liquidity, it comes down. On the 4 hour time frame, it didn't take down any low. Okay, so this one is just staging all this how do I call it, low resistance liquidity. Okay, it is just staging all this low resistance liquidity. So these are engineered liquidity. Price has to come and take down after some time. Okay, so I believe that if price rallies above this high, my expectation is that price should trade above or into this mean threshold. And into this mean threshold, if I have any form of reversal happening inside this mean threshold, I would engage the market, and my target would be to sweep down all these lows resting in here. Okay, this engineered liquidity, to come and take down all these lows, this low as well as this low. Okay, so this is basically what I'm expecting. So for now, I'm not engaging the market, because this is what I'm seeing. Okay, you could see that on the 4 hour, price has dipped into this fair value gap in here, and you could see how it quickly rallied away from the fair value gap. When such things happen, it tells the picture. The picture is so clear. Okay, and I'm foreseeing that if it happens this way, we are looking at price coming back to sweep this high. Okay, so I'm expecting the price comes to take this high. Let's look if on the 1 hour time frame we can have some form of trade setup on the 1 hour time frame. Okay, you can have some form of trade setup on the 1 hour time frame. Okay, so here you see beautifully price reversing from this point, continuing up. Nothing so clear on the 1 hour time frame in here. Okay, nothing so clear in here. So this is the low. Whichever level price has to trade into, we are expecting that this is a protective low that price shouldn't take down. It is a protective low that price shouldn't take down. All right, let's look at it on the 15-minute time frame. Okay, so on the 15 minutes time frame, we had this low, high, low, and then structure shifted in here. Price came back to take orders here. This internal liquidity rallied up above the external liquidity. Okay, and then we continue. So now we have this as a major swing. Okay, we have this as a major swing. All right, and then we are seeing price breaking above the swing. Has it broken above it yet? Nope. So price hasn't taken the high above this. If it should take the high above this, then we know that now this become our major swing. Okay, so should price trade above this high, okay, if price trades above this high, now this becomes another long-term low, or a low that can't be easily rated. So now we look for a reversal. If price trades back into this, so for instance, this is how it's going to look like. Should price trade above this high, okay, okay, so should price trade above this high, okay, should price trade above this high this way. So if we have something of this sort, okay, now we would want to seek for price to reverse into discount prices, maybe 50% of it, which could be maybe trade into this other block resting in here and then rally back up. Okay, or you can trade down below this equal lows resting in here and then rally back up. Okay, whichever level you find a reversal happening, so this can be a perfect form of how do we call it, a perfect form of reversal. Okay, good. So that's what we are expecting. But if it doesn't break this, if it doesn't break this high where we have got into, okay, should price reverse? Price wouldn't reverse. Price should reverse and not take down this low. Okay, price can't come back and take down this low. Okay, so this is a major swing from this to this. So whichever level should price reverse, we are looking at, okay, so price should look at 50% of that, which should be this is a equilibrium level. So price can trade from this point, it can trade all the way back below this, okay, and sweep this lows resting below this, come into this equilibrium level, either trade back into this area and even sweep this how do we call it, fair value gaps resting here, this internal liquidity on the 15 minutes time frame. Price can come and sweep this internal liquidity. And should price do that, should price not take this high, okay, and then it comes down below this equilibrium level into this fair value gaps resting in here, we have a very good trade entries. So you frame your setups around this area, where if you have the 5 minutes time frame showing you some sign of reversal below the equilibrium, whichever level it shows you the reversal, engage the market. Now what your target will be is this relative equal highs in here, because liquidity has been built above it. Okay, liquidity is built above it. So this one would want to expect, if price comes back down all the way back into this equilibrium level, it will be a very good shot for you to engage the market. Okay, all right, so now let's look at the next asset pair, which is volatility 75, which has been one of the asset pairs that we've already posted analysis on and all that's happening in here. Okay, so on the monthly, we could see the price actually took down this, price traded back into this close in on this liquidity resting in here. Okay, this is the internal liquidity which was on the weekly. Price came to close in on the weekly fair value gap. All right, and then we expect price to, as it has closed in on this weekly fair value gap, it has come down to also close in, on the monthly is closing in on this fair value gap. You know, this fair value gap was taken long ago, I mean with this wick. Okay, so the remainder was on the weekly, which was now taken. Now price, after it took this fair value gap, what did it do? After price traded into this fair value gap, what did it do? It came down, it accumulated here, and then it did expansion and took down this high, okay, resting in here. So as price is taking this high resting in here, where does your eye go to next? Is this internal liquidity resting in here, and beautifully price has just done that. It's dipped into this internal liquidity awesomely here. Okay, now let's look at on the weekly time frame. On the weekly time frame, you could see that price has traded deep into this fair value gap resting in here. This is an internal liquidity. Okay, price has taken this internal liquidity, and we saw the reversal happening in here. So price traded back down, and what is it seeking for? Okay, what is it seeking for? So on the monthly, it has accomplished something on the monthly, which is this internal liquidity taken on the monthly. So, and the eye could be, okay, can it come and take this high, or can it come and take this low? Okay, so after internal liquidity has been taken, we are looking for price to seek for external liquidity. Okay, so now we are looking, either it comes to take this low resting in here, or this low resting in here, or trade even below this. Okay, now let's keep our fingers crossed as it has happened in here. Let's look at on the weekly. So on the weekly, this is a major swing. Okay, this is a major swing. We had this swing from this point, this low, this, and then we said we had a break in structure in here. Reversal accumulated a lot of orders before the expansion. So now it is possible, as price has done this, taking down this internal liquidity. Okay, it is possible price has expanded to this point. We would have price. So let's take this low to this high. So price is traded below equilibrium. Okay, price is traded below the equilibrium level, deep below it, and we could expect any form of reversal happening in here. So if there's any form of reversal on the 4-hour time frame, so for instance, if you go to my videos, my previous video, I told you about time frame and alignment. Okay, so on the weekly time frame, we have price dipping deep below equilibrium level. Now, where do you hunt for reversals, or where do you hunt for price forming some form of, okay, I'm going back up, or I'm continuing down? Okay, so let's look at it on the weekly time. From the weekly, you have to go down to the 4-hour time frame. But here, let's look at the daily time frame to also draw some conclusion and some analysis in here. Okay, so on the daily time frame, that's when we had the structure shift, and then price traded back into the fair value gap, and then we had the reversal back. So this was the retracement, and then the continuation, and then we have some form of retracement. So now let me show you another important thing that you need to know on the market. Okay, anytime we have some form of retracement or continuation, that doesn't take the immediate low. So for instance, we had this swing from this low, from this high to this low. Okay, and then we retrace back here, and then price is normally supposed to retrace and take this low, right? And it doesn't, and it goes above this, or it continues the retracement and goes even deeper. Okay, this is what I just showed you on the volatility 100. Okay, for instance, that's what it's supposed to be. If this is supposed on a normal price is supposed to take this high, and it doesn't, it comes down to take this low. Whatever it frames in here is what we'll look at, and then we'll rally and take this. So it's the same thing happening in here. It doesn't take this low, it goes up and then takes even the high in here, the short term high in here, and it continues. So now the swing becomes this, and and then all the way up here. Okay, and then the continuation, and then the expansion of the continuation downwards. Okay, so beautifully, this is what it is. Okay, this is what it is. Now price had to expand down. For those of you on my channel, or my who on my WhatsApp group, I showed you how I missed the sell stop that I placed above here. I'll show you on the 1 hour time frame why I placed that sell stop. Okay, so now let's look at on the 4 hour time frame. We are still at equilibrium. We are still traded below the equilibrium level. So any form of reversal happening in here, we know that we are good to go for the kill on the buy side. Okay, but then we are still looking for more lower prices. You could see how the price is moving, that it doesn't have any plan of doing in form of reversal. Okay, now on the 4 hour time frame, you could have caught the trade here. Price reverses, forms a high, a low, a higher high, and then it breaks down below this low. Structure shift, okay, happening in here. Structure shift happening in here. Okay, then all the reversal, you could have taken the trade, and then boom, 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 you are here. All right, so beautifully, that is it for us on the. Now let's look at on the 1 hour time frame, where I told you that I had to frame a trade and I missed. Okay, so the entry that I placed was right in here. I saw this, okay, relative equal highs in here, this and this. So I had in mind that price was going to trade and take down this relative equal highs and closing on this fair value gap before the rally down, but fortunately I didn't do that, and then it rallied up down. Okay, so beautifully, that is it for volatility 75. We are just expecting more lower prices. Okay, on the 4 hour time frame, for those of you who understand the market maker model, okay, my expectation was this was the initial consolidation. We had the first stage of accumulation, second stage of accumulation, then ultimately we had a reversal happening in here. Okay, so I expected price to trade below this second stage of accumulation, first stage, and then ultimately below this original consolidation. Okay, and price actually did that. It traded below the original consolidation. All right, so quickly let's go to the next asset pair, which is volatility 50. What are we seeing on volatility 50? Sometimes the market is not so clear, but I mean, you can do your best, and then so let's try and clear our chart object list. Let's try and clear our chart, and we'll look at it from this angle. Okay, so volatility 50, what's happening in here? Price traded below this low and is seeking for more higher prices up here. Okay, so what is it seeking to take? This on the monthly. So the monthly picture doesn't seem too clear. Okay, because from this low, from this high, this low, this high, this low, and we have a form of consolidation happening on the monthly inside this area. Okay, so this is where we have high resistance liquidities being taken. This low has been swept. You see price still trying to push up further. Okay, now let's look at on the weekly time frame where it will fit into our shoes. Okay, let's look at it on the weekly time frame. All right, so on the weekly, we could see that price traded down all the way down this area. What did it do? It came to take this relative equal lows and traded into this fair value gaps, closed in on all the fair value gaps resting in here, and then it is pressing on higher to seek for higher prices. Okay, so now you can see this high in here a target. Okay, it's a possible target. This high resting above this is a possible target. And it's so obvious when you see price pressing on higher. So for instance, from this point you could see how price rallied up, came down, rallied up again, rallied below it. So this is where we have more high resistance liquidity runs. Okay, so you can watch the previous video I posted on the analysis on volatility 50. It will give you more insight. Okay, now from this point you could see how price was forming more higher highs, and then it was sweeping. It dipped into this fair value gap in here, rallied to take this high. Okay, so from internal liquidity it came to take this external liquidity resting here. Okay, and then the target is even more of this external liquidity. Okay, so now we are seeking for this external liquidity. You can see how price is still pressing on higher on the weekly. Now let's look at on the daily. So on the daily too, you could see clearly how price is just still consolidating even inside this area. From the high came to form a low in here, a high, and then a low as well. I don't think this low has taken down this low. Okay, so this low is still not taking down this low. Right, so we are still seeing price pressing on high. Should price trade below this, then you know that the structure here has shifted and you'll be seeking for lower prices. But in this scenario, we could see that price is still pressing on higher. Okay, so with volatility 50, there's not much that I have to say in here. There's not so much that I can say in here, you know. But on the 4-hour time frame, you can have some other ideas and pictures, but it is still not on the daily. It's still not taking this low, so we want to still see price pressing high. Price can come down and take this delve into this fair value gap resting in here before it jumps higher. Okay, before, so from this internal liquidity you can frame your trades around this internal liquidity to take this external target, this external liquidity, this and this as well, which is this relative equal highs in here. Okay, all right, now let's look at the volatility 25. Volatility 25. So on the monthly, what are we seeing? We could see price still pressing on higher. Okay, so we frame this as our breaker block. Okay, our breaker. Okay, and then price is trading more into the breaker. And what are we seeing? There was a fair value gap which was already taken. Price delved more, closed in fully on the fair value gap and is trading here. Let's look at on the weekly. On the weekly, there is this price closed above this. So price traded. Let's look at it from this point. Price traded into this fair value gap in here, closed in fully, paired the orders, and then it rallied above it and used the fair value gap as an order block. Okay, and then look at how price respected the fair value gap in here, and then boom, it traded up to take down this high. Okay, and then it came up again to take down this high as well. Okay, so as price has taken down all these highs, okay, So it is from this internal liquidity where we staged to rally up to take down these highs. Okay, now as we have taken down this high, where is eye drawn towards? Okay, now look at this breaker in here. Price traded slightly and this breaker, price traded slightly and touched it, and then that was when we had this form of rejection. So I'm expecting that when price comes into this breaker and we have any form of reversal, we have to engage the market. Okay, so this the remainder of the fair value gap in here, price can equally still press on as it came from taking this internal liquidity and rising up all the way to take this high and this high. There's another high resting in here that has to be taken. Okay, so price can take this high, press on into this other block. Should price trade into this other block, would engage the market, because there was a high in here that this area took, but there's another high resting before the other block, which makes it more valid. Okay, so it's a short-term high before this high, and then we rallied. So this is a valid order block. Price can trade into this order block. The fair value gap before the other blocks even makes it more valid. Okay, price can trade into this area, and then we can engage the market. So on the daily time frame too, what are we seeing? So price came to closing on this fair value gap, boom, and then the reversal back up. Okay, so that's what we are seeing on the. However, I'm still expecting that if price comes and breaks below this, we know that we obviously have some form of reversal, because on the monthly, now what I'm hunting for is I'm waiting for it to stage the area where we can have a form of reversal to take this low. If we take this low, then fine. Then I'll wait for the retracement and then engage the market. Okay, yeah. So that is it. If you can look at it on the weekly, that price has taken down this high. Okay, now we have taken a high from internal to external. Okay, where else is your eye drawn towards? We can come back into this internal before another external, or before, if it goes from internal, before it can go up and take this external. Okay, obviously that's what I'm expecting. All right. Okay, so that is it for volatility 25. Let's look at volatility 10. Volatility 10. I'm trying to make this video as snappy as possible. Okay, I don't like the videos to be very lengthy. All right. Okay. Now with volatility 10, what are we seeing on the chart? This is the monthly time frame, and you could see price traded this area, came up above this, so structure shift, price reversed in here, and then we went up above this high. Okay, so now this is where we have our protective low. Okay, so this is how we have our protective low. Now watch this. Price traded into this fair value gap. Okay, so it has taken this fair value gap already into this other block, and then we have this rally up. So now we have this swing from this low all the way up in here, and anything below equilibrium is our discount prices, and we want to engage from here to seek for premium prices. So you could see that price dipped into the discount prices, and then we rallied up. However, price can still come further and close in further on this fair value gap, depending on what's happening on the weekly and then the. So let's look at the weekly time frame. So on the weekly time frame, this is our protective low, okay, that we are not expecting price to come in and close in on. And we have price rally up all the way this way. And this is it. Okay. This is it. So we still have this area as that traded into the 50% level. Okay. So on the weekly, it's still clear that we are in a bullish market. Now, are we expecting price to come down in here? For what I don't think so. I'm not expecting, but let's look at on the daily time frame. When you look at on the daily time frame, you could see how price rallied, the reversal. Okay, so as I told you, when we are having retracement, price doesn't retrace straight away. Boom, it just takes a time. Okay, so it has to follow the usual swing. Okay, so now this is one swing, and then it trades above this swing. So we have a structure shift here, and all that happens in here is a form of retracement. Okay, so as we traded above it, this was one of the swing, so this was a low. Okay, and then we have a high in here. All these are highs, but then in as much as this low didn't take down this. Okay, so we have this low, and then it formed the high. Then we have this low. Okay, so now watch this. Interesting. Oh, so it seems my network is not really helping anyway. But then let's still press on. Then we have this low, which didn't take this low, and then but it treats above. This is the protective high. It treats above the high, so this swing is a valid swing. Okay, it's a valid swing here, and then it comes back and doesn't take it. Okay, but then watch. It's so interesting. We have this swing as a high and then a low. We have a higher high. Price comes back to break this low. Now structure has shifted to the downside again. Okay, then it forms a low. Let me zoom out for you to see what I'm talking about. It forms a low, it forms a high, a lower low, then boom, it breaks the structure again, and we have a further validation that price has to continue up higher. Okay, or has to be more bullish. Now we have the retracement happening in here. So from this swing all the way to this. Okay, so this is a retracement. Okay, so as price traded below the equilibrium, we expected the price to continue the expansion higher. Let's look at on the 4-hour time frame. From the daily, let's look at the 4-hour time frame and see what possibly can happen or suffice here. Okay, so on the 4-hour time frame, this is where we had the reversal. Okay, so the reversal comes in, and then we have price doing this. Okay, has it taken this fair value gap? Yes, it has. So you can see that price traded slightly into the fair value gap. Okay, so it took the fair value gap down. And then let's look at it on the 1-hour time frame. Let's look at it on the 1-hour time frame. This is what I'm expecting to see. So on the 1-hour time frame, we have this low, this high. Sorry, we have this low, this high, this low, this high. So price has broken this high, which is a structural shift to the upside. Okay, so here, this particular high is a very important high in here. Okay, that price has traded above it. Okay, price has traded above this high. So price is looking to also retrace into this swing. Okay, so this is the swing. So the swing was from this high, this low, to this high, this low, and then a major swing here. Okay, so whatever it does here is a form of retracement. So look for the 50% from this to this. Okay, so should price come back into this equilibrium level, engage the market, go to the 1 hour, 1 minute or 5 minute time frame and seek for reversals or a break of structure upside to the upside here, and then engage. Okay, as beautiful as that. That is it for volatility 10. Okay, so basically that is all that I have for you tonight, and then I believe that this update has been of good importance to you. Now I was trying to draw our attention to what is also happening on Euro US dollar. Okay, Euro US dollar. For quite some time now, I've decided not to engage the Forex currency pairs, but then when the road is clear and the path is straight, you can also share your opinion. Okay, So awesomely, I can see that you can see on my chart that there has been a break of structure on the weekly, and we saw a retracement. Okay, this is above the 50%, which is a premium price. This is inside premium, but in a selling environment, we want to stick our sales inside premium. Okay, so we put the sell in here. You could see the reversal happening beautifully in here. Okay, then we see the breakdown. Don't be surprised, next week we'll have a very strong sell happening next week. Okay, because this is a power of 3. Okay, we have a very beautiful swing happening in here, and we want to see price breaking down. So I'm going to make a comprehensive video on this, but then not today, not on this video. Okay, this is just a brief update on how things are spamming on this market.